Yeah, welcome once again. Today we are going to be looking at the update Nigeria Finance Act 2021 top 10 changes. The 2021 Finance Bill was signed into law by the Nigeria President on 31st December 2021 and takes effect from 1st January 2022. Below are the top 10 changes. It might interest you to know that in the year 2022 that we are now, there are so many changes in the tax system. Some people who are filing for so many things go to tax office and discover it's no longer like this, it's like this, it's no longer like this, it's like this. So there are changes, and this video will be very helpful to ICANN students, those who are preparing to write taxation in 2020 November diet 2022. At least these changes might be asked in the exam. What are the top 10 changes in the Finance Act 2021? Stay back and listen to the top 10 changes with detailed explanation, and also to those that are practicing. You are computing for VAT, you are computing for tax, CIT, EDT. There are new changes to this. So you also need to sit back and listen to these top 10 changes. Now, let's go. Having been said, it was signed by the Nigeria President on the 31st December 2022 and take effect from when 1st January 2022. Below are the top 10 changes. 1. Capital gain tax. The capital gain tax of 10% is chargeable on the disposal of shares worth 100 million and above in any 12 consecutive months, except to the extent that such proceeds is reinvested in the share of any Nigeria company. Sorry, that Nigeria was wrong. I'm just seeing it now. Now, capital gain tax has been increased from 5% to 10%. So in 2022, whatever you are going to do on capital gain tax should be what? 10%, no longer 5%. And remember, capital gain tax is always on the disposal of share. And if this disposal of share will be reinvested in Nigeria company, you are not going to pay any what? Capital gain tax on it. As long as it's going to be reinvested in any Nigeria company, you are not going to pay any 10% capital gain tax on it. But if it's not going to be reinvested, you want to flex with it, you will pay what? 10% capital gain tax on the disposal of shares. Mind you, it has shifted from 5 to 10. The next top changes is this: education tax, EDT, also known as tertiary education tax. Now, the education tax payable by Nigeria company has been increased from 2% to 2.5% of accessible what? Profits. Of accessible profit. So know it today that your EDT is no longer 2%. A friend of mine did a computation. I went to tax office and he was saying something like that. Why is it like this? He called me and said, Mr. Israel, I did this and this is happening. I told him, how much did you use for your EDT? He said 2%. I said it's no longer 2%, it's 2.5%. And even those that made some filing on tax pro mass will bear me witness that once you impute everything on your tax pro mass, the tax pro mass has come to stay. Once you input everything, the tax promise will bring out your EDT, your CAT, everything automatically. And when you calculate it, you find out that it's 2.5. If you have been calculating 2% for your EDT, please, it's no longer 2%. It is what? 2.5% of your what? Accessible profit. Is that taken? Yes. So let us move to the next top change now. Educational activities, schools. Now, companies engage in educational activities are now subject to what? Corporate income tax, regardless of whether such activities are of what? Public character. Now, initially, schools, ecclesiastical, charity organization, they don't pay tax. They are exempted for tax. Why? Because they are of what? Public character. But now, the tax authority has revisited it and said, you are of public character and you are collecting money from the student, from the public. So they are saying that in as much as you are collecting fees, school fees from the public for educating them, you should be subject to tax. That if you want to operate a public character in the aspect of tax, they say that public character should go like this. Yes, it is okay that you are doing something that is benefiting the public, good or fine. So if you must do this that will benefit the public, don't collect any money from the public. They will not charge you for tax. But as long as you are charging these people that you are helping to impact knowledge on them, my brother, my sister, my director, you will be subject to tax. So that is the stand of the FRS. They say as long as students are paying school fees, and if you watch, they are actually paying, check some schools, they're collecting very large sum of money for school fees. But I've not come to discuss that. I'm only here to tell you the top changes. I'm not against or in support. That is not what I'm here for. What I'm here for is to tell you the top changes and tell you reasons why those things are happening. They say if schools say that they don't want to pay for tax, then they should stop collecting school fees. But as long as they are collecting school fees, they're going to what? Pay for tax. That is what public character in this context mean. So know it. If you are a perpetrator, know that you are not subject to tax. Is that okay? So let us proceed to the next one. Is science and engineering. Yes, a science and engineering levy of 0.25 of profit before tax is payable by what? Company engaged in banking, mobile, telecommunication, ICT, aviation, maritime, and oil and gas with turnover of 100 million and above. Now, listen, when I was making a filing on tax promas this year, sorry, this video ought to have come earlier than this, but please forgive me that I'm bringing it now. Yes, I was making files, so I discovered that NIT dev is there. The first one I filed on tax promise gave me NIT dev, but it didn't charge me anything. Why? Because the company I was filing for, we are not engaged in any of this mention. And moreover, the turnover is not up to 100 million. You understand? So I was not charged anything while filing for that company. I also filed another. I saw NASIN, National Agency for Science and Engineering Infrastructure, still under engineering and science and engineering. The same thing happened. Nothing was charged on it. Why? Because they are not engaged in this, in any of the activities mentioned above, and the turnover is not even up to 100 million. So I wonder, how come? Now, this two thing was introduced. So people were saying, what kind of this one? Which one is this? Which one is this? Now, let me show you the two. This thing I filed on tax promas TC that gave me these two, NITDEV and Nissin. I don't know why they are coming like this, but let me just show you briefly. Good. Let me zoom it. This is Naseni. And Naseni is giving me 0, meaning they did not charge anything on that. 0, because they are not engaged in any of that mentioned, and their turnover is not up to 100 million. And this is NITDEF, and it's giving me 0 again. That shows that the same thing is applicable to them. But I don't know why they are bringing it here and here. Maybe it depends on your section of business that you operate. they'll, yeah, maybe it depends on the section of business. So science and engineering tax has come to stay. Now it is 0.2% of what profit before tax. That is 2% of your net profit before tax. Before tax. So bear it in mind that when you are filing, you should know that you are going to almost 2.5% of your net profit before tax for either Naseni or NITDAF. Make sure they are engaged in the business mentioned above. But if they are not engaged in any of these business, don't worry. Even if they are engaged in any of these business and the turnover is not up to 100 million and above, forget about it. They are not going to tax you on that. So that is the benchmark. So I believe this one is okay. Let's move to the next one. Yeah, Nigeria Police Trust Fund, PTF. Yes, when I was making that same filing this year, I discovered PTF. Because initially to file for your CIT, your company income tax, you only file for two things: your company income tax and your EDT. Yes, those are the two things they are interested in, your CIT and your EDT. But when I filed for this one this year, I began to see PTF, Nasini, EDT. No, now they are now 4 instead of 2. They are now 4. I said, what's happening? So let's take a look. FRA is to assess, collect, and enforce the payment of Nigeria Police Trust Fund levy. The tax was introduced in 2019 at the rate of 0.005% on net profits of company operating in Nigeria. This one, the hard hit. 0.005% is to be deducted on the net profits of any company operating in Nigeria. They are going to deduct 0.005% from. Do you know the funniest part about it? Whether there is no benchmark on this. There is no benchmark on this. Even if it is the 0.01 is 1 naira, you must pay. If you make profit of 2 naira, you must pay 0.001% of 2 naira. If you make profit of 5 naira, you must pay 0.005% of that 5 naira. Now, for all companies, police must collect their own. Sorry, I'm using a foul language. Police must get their what? Pay. Nigeria Police transfer, at least they are using it to empower the police stuff. Now, except you did not make profit at all, that is when you will not pay for your PTF. But as long as you made profit in their business, no matter how small, no matter how big, you are going to pay for what? Police trust fund. Let me show you. Yes, I also made that file in here. Police trust fund. Sorry, is police trust fund education. Police trust fund. Oh, I'm sorry for taking your. Sorry. Yes, below the Nasini, you see police trust fund there. Below this Nasini here, and it's how much? Guess. 240.967. Approximately 241 naira they are deducted from this company. See, it's very, very small, but small soup. Small. Nice soup take the full pot. So they will get it like this, small. And before you know, it's up to something good. So that is it, you must pay. Here is 240.961. See below the Nasini, the one on red cycle, below it, you see the amount there. So that is the amount you pay for police transfer. So it has come to stay. That is one of the top 10 changes that has been made. Now, bear it in mind that you'll be paying for your what? 0.005% of your net profit before tax, as long as you do business in Nigeria, as long as that company resides in Nigeria, you're going to pay this to the police. I hope that is taken. Now, let's go to the next one and see what that one is saying. Yes, excise duty on non-alcoholic beverages. Not alcohol. Non-alcoholic like Coke, Fanta, all those drinks you take that is disweetening, all those ones. This year, they have subject to tax now. Now, listen what they say about it. Imposition of excise duty at 10 naira per litre on non-alcoholic carbonated and sweetened beverages. This could translate to an increase in the retail price of product by up to 5%, with lower end products bearing higher burden. Now, you see this now. That is why you see our Coke just recently skyrocketed high, because you pay 10 naira for every 1 liter of non-alcoholic you consume. I pay 10 naira for every non-alcoholic 1 liter of non-alcoholic I consume. Now, the burden is not on the people producing these drinks. It's not on Coca-Cola, it's not on Fanta, it's not on this, it's not on that. It is on what? On the final consumer. Coke that we used to buy, for example, 100 naira might increase to 150. Why? Because of this tax rate. Again, you pay tax rate. The person that is selling will want to make profit too outside the tax rate. So these are things that makes Coca-Cola or all those drinks to increase. Now, I think maybe they want us to stop consuming sugary things. Also, it will also help us to watch our sugar level. I don't know. That's not what I'm here for. What I'm here for is just to tell you the current changes and be on the known that you are paying 10 naira for every 1 liter of non-alcoholic content you consume as a person, making it approximate of 5% of non-alcoholic drinks. So, students, be aware of this, practicing. Those in practice, so let's be on the known for this, that non-alcoholic beverages are now subject to what? To tax. Wow. Let's move to the next top 3 changes. Reduction in minimum wage. Yes, the reduction in minimum tax rate from 0.5% to 0.25% of turnover less frank investment income will apply to any 2 accounting periods between 1st January 2019 and 31st December 2021, as may be chosen by the taxpayer. Here there is right of election. Now, minimum tax has been reduced from 0.5 to 0.25 of turnover less frank investment. I believe we all know what is less frank investment income. There are those income that have been taxed from source. Frank investment income cannot suffer another tax. If it suffer, that means it's double taxation. Hello, that means it is double taxation. Now, frank investment income are those income which tax has been deducted already from source, mainly on shares. Are we together? Okay, so that is this minimum tax reduction have been what? Reduced from 5 to 0.25. Sorry, I have some crack of voice. Sorry. Now, having known this, so let's move to the next top changes. Yeah, foreign digital companies. Those foreign digital companies in Nigeria now will have to pay for tax. Now, FIRS may assess tax on the turnover of a foreign digital companies involved in transmitting, emitting, receiving signal, sound, message, image, or data of any kind, including e-commerce, app stores, and online adverts. Such companies are also obliged to charge, collect, and remit VAT to FIRS. So that is it. Foreign digital companies, you know them. I don't want to mention any of them here. Foreign digital companies are now subject to tax. Know that. Know that as a student. Know that also as a practicing colleague. Now, let's move to the next one. FIRS and its responsibility. Now, they've given an FIRS a new responsibility. Now, take a look at this responsibility. Only FIRS is to be recognized for the administration, assessments, collection, accounting, enforcement of tax and levy due to the federation. Due to the federation, the federal government and any of its agencies except otherwise authorized. If you are not authorized, FIRS don't interfere. They are cutting warnings to them. FIRS are cutting warning. If we do not ask you to collect tax made for the federation, please don't near there. FCTRRS, maintain your lane except we ask you to collect. State Internal Revenue Service, stay on your own except we ask you to collect. Everybody, maintain your lane. That is what they are saying here. FRS is telling everybody to maintain their lane here, except they ask you to collect this, then you can go ahead and collect. Hope you know this now. So let's move to the next one. And here is the next one. We are talking about Finance Act 2021, Acts amended. Now, all tiers of government are now empowered to borrow for critical reform of significant national impact. In addition to capital expenditure and human development, the tiers of government in Nigeria now have the right to borrow for what critical reform of significant national impact, as long as what they are borrowing is of national interest, as long as what they are borrowing is going to enhance the development of Nigerians and Nigeria as a country. They have the right to do what? Borrow. All tiers of government now have the right to borrow money for development. Is that clear? All tiers of government are now empowered to borrow for critical reform or significant national impact, in addition to capital expenditure and human development. I think at this point they have that is all about the top 10 changes in the Nigeria Finance Act 2021. Sorry that this video is coming at a time like this. We are very sorry about that. But subsequently, we're going to be bringing it earlier enough so that you can get acquainted to it before they start enforcing it. So I believe this helps you. I believe it helps you. Please, you can do Mr. Israel a favor and just share, like, and most especially subscribe to this YouTube channel. Thank you very much. We are going to be doing more together here.